Hello, everybody. We'll be getting started with the fundamental analysis webinar at this time. Welcome. My name is Troy. I'm a senior account manager with AvaTrade. I'll be presenting. As we get going, let's do a quick systems check. If you would, just type OK in the chat box if you're hearing me clearly and seeing my screen all right. All right, great. I've got enough responses. Thank you. Looks like we're up and running fine. If anyone has any issues as we go along, just let me know. As we get going, keep in mind, as always, no one trade is guaranteed to bring you profits. There's risk with each and every trade that you take. You should probably think about managing risk in a way that makes sense for your risk tolerance and for your balance. You can use stop loss settings, hedge trades set up. By hedge trades, I mean pending orders that can kick in, sell stops, buy stops. That could kick in the opposite direction to cover you in case things go the wrong way. There are a number of ways to manage risk. We go over different ideas as we set up strategies, and if anyone has questions on that, we can go over ideas. There's also AvaProtect, which is a feature found on our WebTrader platform and our AvaTrade Go mobile app that as you open trades on your MT4 or MT5 account using those trading options, those platform and app options, you can actually add protection onto trades for a small premium cost. So any losses during the protected time period is covered completely. And the trade can actually keep running once the protection ends, as long as you didn't get stopped out. Or stop outs, your money's paid back if it's stopped out during the covered time period. So AvaProtect is a nice feature as part of a risk management plan potentially. So you might check that out. As we go over strategies and ideas and information, keep in mind that it's not to be taken as financial advisement, but is coming from an educational perspective. Now, real quick, what is fundamental analysis? For those of you that are new to trading, I know we get a number of beginners in the webinars as well as advanced traders. Don't worry, whichever end of the spectrum you're on, I think we'll cover things that are pertinent for you and helpful. And I don't think it'll be too high or too low for anybody in terms of what we go over. Now, what is fundamental analysis? Real quick, before we get into the live charts and information, it's basically the news. It's what's happening around the world. It's anything other than looking at the price movements on the candlestick charts, which is technical analysis. So fundamental analysis, we look at two types, basically: regular economic events, which would be jobs announcements, GDP numbers, factory production numbers, housing data. A lot of this that came out today, pretty positive for the UK and the strength of the pound today, and some negative numbers in the US, which really shook the markets a bit today, along with the COVID fears. And as I mentioned, the COVID fears, those would be the extraordinary economic events, the other type of fundamental news. So the regular economic events, there's scheduled economic announcements for each country, specific times for specific topics, maybe a little easier to plan for. The extraordinary economic events, you just don't know. Let me go back a slide. You just don't know when the extraordinary economic events, when the headlines might hit. You know, Trump is expected to sign a big, almost $1 trillion stimulus package later today. What if he doesn't? What if a headline breaks that says he refuses to sign it, he doesn't agree with what's in it? Boy, wouldn't you see a huge move in the markets and with gold and oil and everything else, right? That type of fundamental news, you just can't predict what it will be or when it will be, but you can still prepare for it. A lot of times with pending orders in strategic locations, just waiting for unexpected news to make a big breakthrough through a price level that you think is important. And I'll show you how to look for those types of price levels and set up those types of pending orders for the extraordinary type of economic announcements or events that can occur, whether it's the unexpected Brexit headline or headline out of China, or COVID spreading headline or whatever it might be. You can have pending orders just waiting on assets that you know move with volatility, like gold, like oil, like the indices, etc. Like any pairing against the yen, right? Which is a safe haven currency, the yen. Okay, so let's keep moving. I pulled up some headlines that I think look important. Nasdaq, okay, it's the only you see here. It's the only one in green. Quick fundamental view right here. You can see what's happening today. Futures were red all morning. The market opened red except for the Nasdaq, and that was expected. Why? Because of Apple. Apple's a big part of how the Nasdaq moves, and so because Apple has a lot of pre-orders for their phones and for their products going into the Christmas season here, Apple's really strong and helped pull the Nasdaq up. Everything else was dropping all day, okay, in terms of the stocks and the major indices and the commodities for that matter, because of some fear on the markets, okay, and some weak economic data that came out, which we'll take a look at here in a second. If we look at the economic calendar, and when they say weak economic data, they're talking out of the US. We've got some corporate profits worse than it, not as good as expected. Core PCE prices lower than expected. GDP numbers were better than expected, but you take a look down here, consumer confidence, and that's a big one for the economy, dropped a ton. It was expected to go up and it dropped. That's a huge negative on the markets today, and that really created some fear. Existing home sales down 2.5 times more than expected in the U.S. And if we look at some of these other numbers, kind of flat. Okay, so all in all, kind of a fear-creating day for the U.S. anyways. I mentioned the GBP was a bit strong. Look at here, GDP numbers good out of Great Britain. Current account was a little worse than expected, but business investment higher than expected. Some good numbers coming out of Great Britain. So the pound was a little bit bullish because of that. And keep this in mind as we go to look for potential entry points now. Keep in mind the fundamental news. What else is on the markets today in terms of the news? Drug makers rush to test whether vaccine stops the new coronavirus variant. So, you know, all this fear about the new strain of coronavirus in the UK and the fear of it spreading, it's really also kind of put a damper on the markets yesterday and today. Boy, that headline could come anytime, right? What if Pfizer or some of these vaccine makers come out and say, bad news, the new variant of COVID, the vaccine doesn't guard against it? What if that was the case? You could see the markets crash huge because it would be like starting over with a new vaccine development if that was the case. I think the expectation is it will help against this new strain. The vaccines will help to defend against even this new strain of COVID, but there's some nervousness about that, and you can see it in the headline. It says drug makers rush to test whether it will work against the new strain. So there's some stress there, and you know, the markets like certainty, and the markets do not like uncertainty. So if things are uncertain, which they are about this headline, that helps explain the pullback in the market today as well. Okay. Consumer confidence dropped. We already looked at that. That's kind of sapping economic momentum. That was the economic announcement we looked at just a moment ago. For those of you trading with the AvaTrade Go app or the web trader already, you probably are aware of the features I'm about to show you. Those of you who are trading directly on the MT4 or MT5 platform or MT4 or MT5 mobile app, you might not realize what you're missing if you're not using our web trader platform or the AvaTrade Go mobile app. Real quick, I'll show you to download the AvaTrade Go mobile app. You go here where it says trading platforms and go to AvaTrade Go. Okay, and whichever app store you use, you can click the link, it takes you to the download. All the features I'm about to show you in the web trader are also available on this app. Okay, to log into the web trader, you log in from here, from our main website. which takes you to here. This is the web trader platform. If you've been with AvaTrade for a while with your live account, and when you log in from our main website here, you go directly to the client area and you don't see this platform, talk to your account manager or to support and ask them to add it to your setup. And you can have this platform as well. It trades right over top of the MT4 or MT5 account, whichever account you log into, and you can switch accounts here. Switch to demo, switch, if you have more than one live account, you can switch to whichever account you want to be logged into, and that's the account you'll be trading on here then. Okay, very simple. So why do I want to show you this? We're talking about fundamental news. So one thing I want to show you is on all live accounts, those of you with demo accounts and not live accounts yet, you might want to upgrade to a live account to really try out all the features. Trading Central is a premium service, costs AvaTrade money, so it's not on the demo accounts, but all live accounts, regardless of your funding level, minimum funding and up, you have Trading Central available for free. And the economic calendar is on the demos, but these other features are not. And I know we're talking about fundamental news, but if you click on something like Analyst Views, you get the technical analysis of a lot of different currency pairings here. It gives you the complete breakdown of the strategy to trade on, what price levels you might think about getting in or out at, what direction to trade, free signals right here on your Forex trading. So that's a very nice feature. A lot of places you have to pay for your signals. So that's free for you, and they're updated continually. Market Buzz, this is fundamental news. And again, available on the live accounts. You can see what's trending today. It's almost always Apple, Google, Microsoft, Tesla. Here's Pfizer, etc. So we've got different assets that are trending. And if you're interested, well, what's going on with Microsoft maybe? So you click on the bubble. You see how many articles were there, 131. You can click on the stories and it'll take you to the website to see the complete article about that asset, the fundamental news that's happening. So right there at your fingertips, you see the time. This article just came out 44 minutes ago. So relevant, new fundamental news at your fingertips without having to search for it. And you can see it's on reputable sources, Business Wire, TechCrunch, etc. All right. And the further down the list you go, 1 hour, back 2 hours ago, it's continually updating new articles, the most recent ones at the top. So if you click on the article, expand it, takes you to the website, and there's your article. And it's talking about Microsoft because we clicked on the Microsoft bubble in the Market Buzz. So very cool feature, saves you a lot of time to do quick fundamental news. Okay. Joseph, good question. The question is, can Americans trade with AvaTrade? The answer is it depends where you live. If you're, for example, I'm an American citizen, but I don't live in America. So it's the ability to trade with AvaTrade is based on your residence location, where you live, not your citizenship. So if you live in America full time, then you're not allowed to trade with AvaTrade because the regulatory rules in the US are such that they don't allow the same types of leverages, margin requirements. The trading conditions are required to be much different, and many times traders don't see those trading conditions as being as attractive. And so, oh, you're in Mississippi. Okay, so if you have a corporate entity that's overseas, you can open a corporate account, okay, in the name of the corporation, that's fine. If you have dual residency and you spend at least half the year or more in a country other than the US, then you could use that residency if you live in 2 places. But if your full-time residency is in the US, then yeah, Canada's okay. We have a complete regulation in Canada. So Canada's fine. We're fully regulated in Canada, and if you're there, sign up, trade away. It's more than okay. But US is the big one. A lot of retail brokers don't accept US clients for that reason, because we'd have to change are offering so much, which other people around the world, it might turn them off to have all of the rules set to meet, the rules of one country, and then it maybe messes things up for how people want things in other places. So, we're not here to tell you what leverage you should or should not want to trade with, or how much risk you should take. That's for you to decide. But the different regulatory bodies determine whether we can take clients or not. And the U.S. is pretty much about the only location in the world that we don't take clients from. It's a very good question. But we are regulated all around the world in lots of places. I think we're the most heavily regulated broker out there. So you're in good hands. You would just have to find another solution for trading with us. Like I said, maybe a corporate entity. If you own a business in another country, you could open in the business name, which is perfectly legal. It's not something like you're tricking the system or something. It's okay to do. All right, so let's then take a look a little bit at this platform. I mentioned AvaProtect. So, if I slide the chart out of the way and open something that AvaProtect is offered on, like gold, if I bring up gold and I say, maybe I think gold should rise after pulling down today. Maybe I think it'll head back to 1900 or 2000, through the end of the year. So perhaps I say, maybe I want to trade with, I don't know, 15 ounces. Seems like a small position, right? 0.15 lots. Maybe I say stop loss. I don't think it'll drop below 1800 maybe. So I put my stop loss at 1799 and I put my take profit at 2000. Maybe that's where I think it'll go. And I'm certainly not telling you this is the trade you should do. Yeah, we take clients in Japan. Absolutely. We have clients from Japan. We have clients from Hong Kong, all around the world. Okay, so what we're looking at here then is if I was using traditional take profit and stop loss, I would say, oh wow, I'm risking $1,000 to get my stop loss below 1800. I might say, well, that's over 50% of my account. I've got about 2,000 in the account. 1,000 would be 50%. Maybe I say, wow, I don't want to risk that much. Maybe, with Trump signing that deal tonight, I think there's a potential, if he signs it or doesn't sign it, maybe I think there's a potential over the next day or two for gold to really move, right? And I say, I don't like the risk here. So maybe for the next couple days, instead of a stop loss, I say, let me use AvaProtect, because I like the potential profit of $2,000, but I don't like the risk of 1,000 maybe. So an option would be AvaProtect. I can protect it for only 1 hour if I'm a scalper, or I could say, listen, I want to get through the next couple days. So I put 2 days protection. I'm only risking 177 over those 2 days because that's the premium cost. I pay the premium up front if I open with this 2 days protection with 15 ounces. My potential profit, if the price shoots up to 2,000, is $2,000, right? And my risk over those 2 days is only what I paid for the premium. If gold drops completely the wrong way over that covered time period, where whatever negative floating I could have on the account when the protection ends, I get paid that from the protection, then the trade can keep running. Okay, so this is a way to get through maybe a time period like now where you expect high volatility, where you could say, okay, for a flat cost, I'm protected against any losses for this time period. Shows me exactly when the protection ends. It could work as part of a risk management plan. Okay. Amir, I'm not allowed to advise on trading. You're asking if gold is going to rise because of the COVID or inflation. I can talk in generalities. And so in general, as the USD has inflation, meaning $1 trillion of stimulus can cause the USD to weaken, right? So if that's signed today by Trump, perhaps that's an impetus for the USD to weaken further. And if it does, that is considered inflation of the currency, right? Or inflation of products, because it would take more dollars if the dollar was worth less. It would take more dollars to buy something. So it causes artificially prices to go up as a currency weakens, and that's inflation. So stimulus in general, especially trillions of dollars of stimulus, can cause the currency to weaken, can cause inflation. And so that is a big driver of gold in terms of being bullish and rising if there's fear of hyperinflation because of large stimulus. Okay, so in general, yes, Trump signing $1 trillion in stimulus this evening, if that's what happens, could be an impetus for gold to go up, and it has been already, right? The U.S. already had like 3 trillion, 4 trillion in stimulus they've done in the past months, and that's why as the Nasdaq was reaching new highs, so was gold, which is weird because the markets are rising. You think, oh, safe haven of gold should drop if the markets are rising, but gold went to all-time highs at the same time the markets did, and that's because of inflation, because of a weakening, a devaluing of the U.S. currency from stimulus, and so that could continue. Now, keep in mind the gold prices maybe have that cooked in. What I mean by that is gold already went up knowing that the stimulus was coming, right? That could be the case too, like when gold broke above 1900, just not that long ago. It hit 1907, knowing that the stimulus was coming this week, and then it pulled back down. So there are no guarantees, right? You also have the January effect. Okay, you could read a bit about that, but in general, that tends to drive gold prices up at the end of the year, going into January. So you've got some things working in your favor if you feel bullish on gold, but you want to protect yourself on the downside because obviously there are no guarantees. Yeah, Roman, that's the way a stop loss works. Put your stop loss at X price. If it moves down, hits that price, it closes. You take that loss, right? Now, if it runs through a weekend or through the holiday where the market's closed, you can get a gap. When the market reopens, it could open below your stop loss, and you could end up losing a bit more than just to your stop loss. So you want to be careful holding positions open through either market holidays where the market's closed, like Christmas, or through a weekend, because news can break through the weekend and change things. And so there can be a gap in the price. Gaps can work for you or against you. Type okay if you're all still hearing me, because I have someone asking why they lost their sound. If you would, just type okay if you're hearing me okay. All right, great, thank you. I have enough responses. Let me just type for Marius. Okay, great. Yeah, Roman and everybody else, that's how the spread works. When you buy or sell on an asset, you are always in the negative when it first opens by the distance of the spread. You only need to overcome the spread, then you're in profit. Okay, and that's the business model of most brokers, because for every 10,000 people that are buying on an asset, typically there's 10,000 or so people selling, and the broker's guaranteed a profit in the middle, giving you a fair marketplace to trade on, with no intent to hope somebody loses. There's no need for that. With a proper business model, with a regulated broker, the profits come from the spreads and overnight interest, and we hope you do well, because even if everyone's profiting, we hedge. If it's unbalanced, if everyone's buying on gold right now and nobody's selling, you'd say, well, the broker's taking a risk, because if everyone wins, then the broker has to pay. But if that's the case, then we would hedge with outside liquidity. We would go with the clients, and if they win, we win. They lose, we lose. And again, in the end, we make money on the spread. So that's the business model of legitimate brokers. And let me let Marius know it's him again. Okay, so that's the way AvaProtect works. And what's nice here with the pending orders, on the MetaTrader 4, when you do your pending orders, you have to know what the terms mean. There are 4 types of pending orders, and if you're new to trading, and even for some experienced traders, pending orders can be confusing, meaning What's the difference between a buy stop and a buy limit, or a sell stop and a sell limit? If I want to program a trade to sell from a lower point, or to sell from a higher point, or to buy from a lower point, or buy from a higher point, which one's which? Because on the MT4, if you put the wrong title, it'll tell you does not compute, and then you get frustrated. Here, all you have to do is pick buy or sell and execute when price hits. You pick execute when price hits, and when you put the price, if it's a higher price, it'll make it a buy stop. If it's a lower price than now, it'll make it a buy limit. It makes it the right type of pending order automatically. You don't have to take the time to choose the type. It makes it the right kind automatically. Same for the sells. Execute when price hits. Just put the price you want to sell from, and that's it. Very simple. So very nice features here for risk management, and also for the fundamental news and the technical signals. Okay. Let's go ahead and take a look at the live movements and look for some potential opportunities. Marius, I hope you've got your audio fixed. The issue is certainly on your side. Okay, so let's take a look at whatever's up. I've got gold up. So do we understand why gold went down? We saw fear on the markets, right? Futures were in the red, and the US dollar, if we go back, was strengthening today. Let's go back and look at this here. You see US dollar index up 0.62%. When there's fear on the markets and the futures are red, usually the USD is strengthening. Those two things tend to go hand in hand. Okay, so the US dollar tends to act as somewhat of a safe haven currency. Fear on the markets, futures are red in the morning, USD is strengthening. What happens to gold that's paired against the USD? What happens is, yeah, Marius, it was on your end. I'm glad you're with us now. What happens if when the dollar was weakening, gold went up? If the USD was strengthening today, what do you think happens to gold? Pulls it down, right? It happens a lot of times, not always, but a lot of times. So looking early today, when you saw futures red, USD index green, you could have started shorting gold through the day today, and you could have made a lot of money. Okay, it happens a lot. Gold kicked up a bit. That would have been a spot for your technical analysis to say dollar is strong, sell. Okay, that's scalping. Doesn't mean gold won't go up by the end of the day or the end of the week, but you could have found a nice entry point to short gold today for a scalp, even if you're buying on gold for the long term. And so we see that is the case. US dollar index was strong today. So down went gold. Okay. And you say, but there's fear. Why did gold drop when there was fear on the markets? And simple answer, USD strengthened. Okay. And so down went gold. There was less fear of inflation of the USD, and down went gold. Now, that's an opportunistic spot if in the longer term you believe gold should go up, right? So let's look. This is the 5-minute candles, today's drop. Let's look at the bigger picture on 4-hour candles. And we say, okay, in the bigger picture, this is a larger uptrend, isn't it? Look at that alleyway on this uptrend. Look at that. Each time it comes to the bottom of this alley, up. Top of the alley, down. Bottom, up. Bottom up and top down. So where are we now? We're at the bottom of this little trending alleyway in an uptrend. So even though today was a downtrend, USD strengthened, gold dropped. Now potentially we're looking at an uptrend off the 4-minute candles if we're looking at this larger uptrend. So if you were bullish on gold anyways, okay, now you can say, well, we caught a bit of a support level here. Okay, support here up. Okay, this was old support, a price where it had trouble dropping below. It bounced up. Then once it broke, it plunged. Okay, now it's back above that price level and sitting on top of it right here. So what could you do? Fundamentally, you say there's stimulus maybe being signed tonight out of the US. Okay, so if if we say, okay, there's stimulus potentially being signed out of the US tonight, which should maybe weaken the USD, then you could take a shot at buying on gold. Because each time the dollar has weakened, we've seen gold rising. $1 trillion of stimulus, let's say, take a shot potentially to buy on gold. The fundamentals say buy on gold, okay? Where should my stop loss be? Probably below this support level over here. Support up, okay? So we come across, get below these wicks over here, and I might say if it breaks below there, then it's still a downtrend. It broke outside of this uptrend slope. If it breaks out of this, below this support level, maybe I give up, okay? That's a scalp, right? So 1850 looks like the magic mark. Let's say 1849 to get below the round number. So modify, stop loss, 1850, take profit. Look, it was just yesterday, it broke above 1900. So a nice round number for a take profit just before 1900, 1898. Okay, so there's the market move on gold. Risking about a third of my potential profit, or half, a little less than half. Okay, if it rises back towards 1900, before that magic number maybe of 1900, which is a nice round number where it plunged from after it dipped above it, it came back down. So if it gets near 1900 again, that might be, technically speaking, a spot where you could take profit. Or close, do a partial close if you think it could keep climbing. Could we be wrong? Certainly, that's why we're limiting risk with a stop loss just outside of this upslope down here. Okay, and just below that old support level from back here. You see, this was the support, the wick came down here. We've got our stop loss just below that. Question is, why are we buying on gold in this example, in this simulation? Because maybe we believe the fundamental news says gold should go up. That's the reason. We're looking at a fundamental analysis webinar, and we've got some fundamental reasons for the dollar to weaken and potentially for gold to strengthen. And the technical analysis lines up with our entry points. So it makes sense to take a shot. F9, you're saying look at the previous 4-hour candle. You mean this one here? I don't know if that's what you mean, or you mean this one. There's a support level right here too. Why do you think this one bounced from here? It hit here and bounced. It wasn't magic. That is the support level we drew from back here. This was the support right here, where it held and went up. So when this came down, it hit that spot and bounced right back up. Now it pulled back towards it and bounced again. Very good, F9. Very good that you saw that. So very nice ratio, potential profit to risk. We've got confirmation of a bounce right here off the support, right at the spot where we would have expected it from this support back here. Okay, so we line up the fundamentals with a nice technical entry point and let it ride maybe, right? If you don't like it, you don't trade on it. But it's a nice fundamental and technical move that could pay out nicely. Now, what about maybe crude oil? Okay, don't I see a support level on crude oil as well? If I look here, right about there. Okay, this was resistance, down, resistance, down, resistance, down. Then it broke above. Look at the momentum it took to get above this price level. After several failures, failure, the momentum, look at the size of that candle. That's how you can see the momentum. That's a breakthrough candle. It took something big to break through, and then it became support, tested and came right back up, became support, and up went oil. Now it came down, and look, here's that magic bounce again. It came down, and look at where it bounced, exactly where we drew our old resistance level, which now acts as support. So it's easy to read. You can see that your pending order could have been down here waiting for a dip to buy off this support level, and up it went. That would be a purely technical move, not knowing if it will drop or when, but if it did, you have a pending buy limit. It would have bought right off this support level, and boom, look at the bounce. It tested it and up. You'd have been in a nice, easy, quick profit with a simple pending order. Right now, we're above that support level. Oil is pushed down. What do you think happens to oil if the stimulus passes tonight? Could be a bit of a push to push oil back up. Okay, oil likes free money for the economy, tends to drive oil price up. Now, again, that money could be cooked into the current price. That could be why oil already went up all this distance, knowing that stimulus was coming, right? So you have to be a little careful with that. But fundamentally, stimulus, I like oil to climb. It makes sense. So if I want to buy on oil, put my stop loss below this support level that already was tested once and held, tested twice and held. So maybe 45.9 for a stop loss. And again, this is fundamentally driven with technical analysis for opportunistic entry points, stop loss placement, and take profits. Okay, so where would my take profit be? If I'm scalping at the first resistance up here, 49.1, okay, maybe 48.9, again, before the round number. There it is. So again, potential profit, maybe about double my risk, right? Proper entry point, potential profit. And you know, we're not just artificially saying put double the potential profit to the risk. It's not an artificial predetermined thing. It just happens to be the technical analysis. We have opportunistic entry points where we can risk less and still be below the support level because we're close to it. And we can not have to break through the resistance and still have a larger potential profit because we're further from the resistance and closer to the support in this case. So we have a natural close stop loss, less risk to get below the support and more potential profit without having to break the resistance. So more times than not, you should win if you're reading the tea leaves right, if the fundamental news is on your side. Marius, what are we talking about? DY, EY, PE? Sometimes I'm not good with abbreviations. Let me know what you're talking about there. Okay, so two potential moves that look good fundamentally and technically to take advantage of the movements that already occurred and the fundamental news as we know it now. Now we talked about what if you want to prepare for the unexpected news? Meaning, what do you think would happen to this support level if Trump comes out and says, I'm not signing the stimulus. I don't like what's in it. I'm not signing it. What do you think would happen with oil? If the fundamental news all of a sudden reversed, the expected stimulus gets declined, vetoed by Trump, what do you think would happen to oil prices? Maybe break the support and plunge, right? So what kind of pending order could I put down here for the unexpected headline? For the headline that could completely reverse things. I could put what kind of pending order to sell if the support level gets broken. This is for the other type of fundamental news, the kind that could break that you weren't expecting. The headlines that can come out of nowhere. A sell stop, right? A sell stop pending order sells from a lower point. So you could say if the price hits here, not only do I have my stop loss on my buy, but I'm also going to sell. The same reason you get out of your buy position if it drops and breaks the support, that's the same reason you might sell because it broke the support, showing downward momentum. Okay, so a sell stop pending order could be prepared here for the potential unknown news that could come. I'm not sure if we'll have time for Snapchat. And actually, I believe it's on the MT5 platform, not on the MT4. So I don't think I can look at Snapchat here on the MT4. For those of you with only MT4 account, but if you're interested in trading on a variety of stocks, add in your client area, go to the My Account section. In the upper right, you'll see a tab for Add an Account. It'll already be verified with your current user account. It'll be the same password, just another login number. You can add an MT5 account, and there are literally hundreds of stocks available that are not on the MT4. Okay, so let's look at Nasdaq maybe. And the same idea of a sell stop below the support level that you could prepare. And remember I said it's easier on the web trader, right? You just say sell from, and it makes it the right kind of pending order. If I wanted to sell here, I need to go to pending order, and I have to know that, okay, I have to pick the right one. I have to know that selling from a lower price is a sell stop, right? And then put the price that I want it to sell from, and I can put my stop loss as well. If I'm selling from down here, say at 45.9, if it breaks, I think there's downward momentum, so maybe I sell. I would put my stop loss then probably back above that broken support, up at 46.4 or something like that. Okay, just an example of how you could prepare for an unexpected reversal of the market. And you could do the same with gold. You can do the same with any asset that you're trading on, any asset. And so quickly, let's take a look at maybe one of the indices. Doesn't really matter which one, they're all moving similar. Here we are. So maybe we look at it. Nasdaq was the exception. Because of Apple, Nasdaq was rising throughout the day. But if we look at the Dow Jones, go to 30-minute candles, we see it was a choppy day and more down than up. Here's the support level today. It's closer to the support. It's worked its way up, but you see it came down, tested, back up. Came down, tested, back up. Okay, so this support level is holding nice. Support here, up, support here, up, broken, plunge. Breaks back above, support. So look at this pattern. What do you think happens if it breaks this support level? What happened the last time it broke? Look here, plunge, right? The last time the Dow Jones broke this price level, it plunged. So it was support, up, break that support, plunge. Back above that price level, support, support. So naturally, what might happen if it breaks the support again? What happened last time? It plunged. So what kind of pending order goes here if you think this broken support would mean a plunge just like this one? What kind of pending order might you put about there at that price? Again, it's a sell stop, right? So for any unexpected news, like maybe Trump not signing the stimulus today, vetoing it, if that was to happen, this support level would likely break. And so why not be ready for that just in case it happens? Put a sell stop pending order right around 29,890, something like that down here. A sell stop just in case that bad news comes. So how do I do it? Again, very easy. Go to pending order, prepare a sell stop that sells from a lower point. And price, I might say 29,880. If it hits there, I'm selling. 29,000, maybe I say 870, just to make sure it actually is a downtrend in my mind. Stop loss would be back above that broken level, maybe 29,500, something like that. 29,880. I'm sorry, 29,950. So 29,950 place. Okay, there's my sell stop. If unexpected news comes and it breaks the support, causing this to happen again, boy, that's a nice sell stop, right? And so where's my take profit? Maybe down here. If it repeats what it did, take profit could be the same plunge as this, somewhere around 29,450 maybe. Let me add my take profit. 29,450. Modify. Okay, there we are. So potential profit about what, 5 times, 6 times what I'm risking? Okay, 5 times, something like that. Potential profit down here, risk up to here. So a broken support, if it does what it did last time, perhaps we have a nice payout. If Trump signs the deal tonight and markets rise, that doesn't cost you anything to have this pending order down here if it never opens. Big deal. Okay. At the same time, couldn't I also buy, do a market buy, and put my stop loss below the support just in case he does sign the deal and the markets rise? So in this case, I'm not trying to be smart. I'm not trying to be, let me rephrase that. I'm not trying to be right. I'm trying to be smart, right? I'm prepared to sell if it breaks the support. I'm buying now because it's above the support and I expect a deal to be signed, which could drive the markets back up. And so I'm ready for either event, right? I'm in on the market move because I'm above the support now, expecting good news. I have my pending order below just in case bad news comes. Okay, and I would need to add my stop loss down here somewhere for this strategy. So 29,870, something like that on the market move. Stop loss 29,870. And where's my take profit if I'm scalping? At the first resistance up here, 30,120. And so now I'm in on the market move. Again, potential profit a little bit more than I'm risking. It's not, or I'm sorry, my stop loss is below the support. This is the stop loss from the potential sell stop. So I'm actually, in this case, risking a little more than I would make. And so again, remember I said it's not artificial. I'm not always putting double the potential profit compared to the risk. And this is an example where that's not the case, where I'm risking a little more than the potential profit because the technical entry point wasn't perfect. I'm further from the support level than maybe is ideal. Some people would say then I won't trade on it, and that's okay too. Or you could put a pending buy limit down here in case it pulls back down to buy from closer to the support level, and then your stop loss doesn't have to be so far away, right? But I'm just doing a simulation here to give you some ideas. Any questions before we end things? Colin, take profit if you're scalping, maybe just before the next resistance level if you're buying on something. Okay, just before the next resistance level. If you're more patient and you expect a longer term trend, then you switch from maybe 30-minute candles to 4-hour or one day candles, and you look to see maybe a price level higher that you'd rather wait for. Yeah, Nasdaq's a little different. They might be similar now. Earlier in the day, Nasdaq was rising while the others were dropping, but it looks similar. You see the support, 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 support. Nasdaq really already bounced off that support. You see, it tested it, went above, and is rising. So you've got support here and resistance up here. I think likely it's going to push towards the resistance right here. Okay, it may test that resistance with the stimulus coming. FDINE, similar to, or I'm sorry, minimum deposit, I believe, is 100. I think it's 100. Check with our support, but I think it's 100. If it's a Euro account, USD account, GBP account, whatever the currency is, I think the minimum deposit's 100. Maybe you could get away with putting less, but check with our support. To have flexibility, though, you might think about larger balance if you have it. So you can, not so you can risk more, but so you can be more flexible with hanging on to positions when you want to, okay? Or for diversifying. All right, everybody, thank you for joining. I think you'll see some nice movements through the rest of the evening. And just be careful leading up to the, it's an early close on the assets for Christmas Eve, and markets are closed on Christmas Day. So you may think about whether you want to carry positions through the holiday and through the weekend or not. Maybe close things off if you think that's better. Okay, everybody, thank you for joining. No time to look at Tesla right now, Omar. I'm sorry. All right, bye for now.